On this March 11th, in a couple of weeks, it'll be 77 years since I bought my first stock. And I paid $114.75. Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business.
Recession and crisis are the best times to enrich oneself. It's not without reason that it's said the rich get richer during recessions and crises while the poor get poorer. Do wealthy people know something more than we do? That's precisely what we'll be discussing in today's video. Warren Buffett is currently the 5th richest person in the world with assets exceeding $110 billion. He's an absolute investment legend, having averaged around a 20% annual return on his investments from 1965 to the present day, whereas the S&P 500 index has averaged only around 10% over the same period. I don't know of a better person from whom we should take specific advice on handling our money and how to invest.
Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business.
This is directly in the year 2024. I'm referring to the situation where the stock markets in America have risen by more than 22% this year, and yes, I'm referring to the situation where interest rates are at record highs. Again, there's talk about how overvalued the American stock market is today. Something you've probably never heard before: Buffett's opinion on whether to invest in real estate and if he himself invests in real estate. This will be enjoyable for you. We'll go through advice after advice together because if we follow the advice of the most qualified, we'll likely profit. As Buffett himself once said, bad news is the best friend of an investor. Hi, we are InvestGuide, and welcome to another investment video. This video will be super useful for anyone interested in how and where to invest in 2024, both in stocks and real estate. I'd appreciate it if you share it with your friends, acquaintances who enjoy educating themselves in investments. Thanks. Let's get into it. The American S&P 500 index has had a fantastic year, attributing itself to over 23% since the beginning of the year. My stock portfolio without dividends has gained over 41% in the same period, making it one of the best years in the last 10 years of my investing journey. It looks good when almost everything in the portfolio, naturally, is in profit. And I guess you're in a similar situation. The question is, how will it be in the future, because interest rates in America are at their peaks, and it's expected that they will decrease next year. This means the interest we receive on our savings accounts will decrease, as well as the interest for which we take mortgages.
Interest rates basically are to the value of assets what gravity is to matter, essentially.
So, how does Buffett advise investing in 2024 when interest rates are expected to decrease? Interest rates are like gravity for stock prices and stock markets. The higher the interest rates, the worse it is for stocks, stock markets, and naturally, also for property prices. Conversely, the lower the interest rates, the better it is for these assets. Everyone is willing to borrow at 3, 4, or 5% interest, and naturally, these funds go into the economy. People spend, the economy grows. People aren't as inclined to borrow as much. Consequently, they prefer keeping these funds, which they consider safe, in savings accounts, if that's the better scenario. Take a look at this graph, where you can clearly see that when rates are low, stocks rise, and when rates are high, we see declines. Analysts and economists predict that interest rates will decrease next year.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
It can be assumed that this will have a positive impact on the stock markets, and stocks will rise next year. Another thing you probably didn't know is that high interest rates also affect bond yields. The safest investment generally is government bonds because, simply put, the state will likely repay your debt, unless you're living somewhere like Venezuela. As interest rates decrease, the money currently in bonds is expected to flow into stocks because bonds with low interest rates won't be as appealing anymore. Investors will move and transfer them into stocks. Naturally, more capital in stocks means higher stock prices, and stock markets will grow. Those who have invested will profit. Once again, the rates will decrease almost to zero. Those who didn't get intimidated and invested will benefit from this. Today we already know that while the American economy has recovered from COVID and is doing quite well, the European economy is faring much worse. The question is, what will happen in 2024? Precisely what the article on my free Patreon discusses in the Outlook for 2024 topic. I analyze there the economic development of Europe, or whether we've passed the worst of inflation, what's expected from the Central American Bank, what impact it will have on stocks, what impact decreasing interest rates might have on gold if you enjoy investing in gold. You can read about all of this in this short, free article. The link to it is in the video description, a great tool to organize your thoughts. Conversely, when stocks decline for an extended period, there's a higher chance that future profits are higher and better. When the market rises for a long time, a downturn simply has to come eventually. These are the economic cycles. It's good to be prepared for such a downturn, because if you're investing for at least a few years, you'll certainly experience it, whether it arrives in 2024 or in the following years. It's necessary to realize that if you're saving euros or dollars under your mattress, these funds quickly lose their value. €1 today will have far lower purchasing power, far lower value in 10 years than it has today. You can see this beautifully on this graph of the dollar, where the dollar had much higher purchasing power years ago than it does today. Inflation erodes the purchasing power of every fiat currency. Wealthy people, even if they don't always talk about it, invest. Investing is the only way to truly protect your money from inflation and multiply it. Regarding stocks, Buffett explains this beautifully.
If you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it.
If you invest in quality companies like Coca-Cola, Apple, Microsoft, and others, these companies have already surpassed numerous crises, spanning decades. So, if a company like Coca-Cola or Apple drops by 30% in the last 3 months, you know that it's a very stable company that is profitable. In such a case, you'll be glad to purchase it at a 30% discount. For instance, I bought Meta last year when everyone was criticizing it. All the so-called experts were on Twitter. I remained quiet and calmly bought into Meta as it dropped at $150, then $120, and below $100. Now, if you take a look, the price of Meta is above $330, and my appreciation is well over 100%. Frankly, you don't need to be a genius to figure out that Meta is simply going to make money. That Facebook isn't dead, Instagram isn't dead, etc. You just shouldn't have been influenced by some so-called experts and simply thought, projected where the company would be in 5, 10 years, comparing some current price. I genuinely believe that this price is high, low, and to buy. It was just necessary not to get confused. Is it true that a good investor should have all their investments profitable? Is that so? No, false. Listen to Buffett. Buffett himself claims that he managed only a few of those very, very good stocks, and the rest of his investments are average. If you look at his portfolio, it's true. He had very successful investments in Apple, Bank of America, Coca-Cola, which he held for decades, while his other investments are indeed, let's say, only average compared to the market. And that's perfectly okay, because the main thing is to stick to Buffett's advice, maybe even his most valuable advice. The most important rule in any investment is mainly not to lose money. If you buy a company's stocks below their intrinsic value, the chances of losing money are indeed much, much lower. That's why on my Patreon, this tool is very important. It's this DCF table, a model to calculate intrinsic value, stock price. Here, for instance, I calculated the intrinsic stock price of Apple, which comes out around $150 per share, and I see that it's trading almost at $200 per share today. So, it's up to me whether I buy or not, but if I had made this calculation a few months ago, recently, Apple could have been bought at $150, and today, I'd be over 20% up. Not only do I protect myself from a major downturn, but I also have a better chance of making a profit. We understand that Buffett is an equity investor, but he has also commented on Bitcoin and real estate several times, stating why he thinks real estate is a lousy investment.
We've both had a fair amount of experience in real estate, and Charlie made his early money in real estate. Under most conditions, it's hard to find real estate that's really mispriced.
Buffett is simply old school about stocks. He understands the stock market, but it doesn't work the same way in real estate. I think it's very similar here to crypto, Bitcoin and the like. We know that Buffett doesn't really like Bitcoin, cryptocurrencies. And I think the same applies to real estate. Buffett sticks to what he understands the most, what makes him money, what he's been doing for 80 years, and I think we also have to take that idea, that we shouldn't delve into 10 things. Yes, of course, stick to what you find, what makes you money in investing, and somehow, in quotes, squeeze it. Because I know many entrepreneurs, successful entrepreneurs. They made a lot of money and thought they could repeat it somewhere in real estate or in crypto. They bought high and sold low, as we all sometimes do. If you want to support my content and get various benefits, you can check out my Patreon. I'll leave the link in the description. Thanks a lot, and see you next time.